We're talking to a guest right now, author Jim Rickards, who has a new book, The New Case for Gold, and he believes gold prices will go to $10,000. Not sure what time frame he's talking about, Jim. What do you think? What is driving gold right now? What will drive it to 10,000, and when is that going to happen?
Well, three different questions, Sharon. What's driving gold right now is what you were just talking about, which is the dollar. Look, when I think about gold by weight, so many ounces, so many kilos. If you have 50 million, you can get a ton. But a lot of people think of it in dollars, the dollar price of gold. You're sort of privileging the dollar as your numeraire. But if you think of it in dollars, the price of gold, the dollar price of gold is just the inverse of the dollar. So weak dollar, higher dollar price for gold. Strong dollar, lower dollar price for gold. So all you have to say, if you want to know what gold's going to do in dollars, ask yourself what's going to happen to the dollar. It's going to go a lot lower, and so the dollar price of gold is going to go a lot higher. That's the trend for the next, say, 6 months to a year. That's what came out of this Shanghai meeting on February 26th. The Fed's been tightening for 3 years. There's a global dollar shortage. BIS came out with a very good study on this yesterday. I recommend it to the viewers. So the Fed's got to ease up. There's no way they're going to raise, at least for the rest of the year. Now, longer term.
But $10,000 is that's a strong call. So when is that going to happen?
Well, that will come when there's in the next global financial panic, which we should expect soon. Remember, we had one in 1998. We were hours away from every market in the world closing. That was long-term capital management. I did that bailout. We had one in 2008. We were days away from the sequential failure of every bank in America. Again, the Fed bailed it out. Come forward 10 years, let's say 2018. The next time there's a crisis, the central banks are not going to be able to bail it out because they haven't normalized their balance sheets. So the bailout money is going to come from the IMF. They have the only clean balance sheet left. They'll use SDRs. That'll be because of loss of confidence in the dollar. $10,000 is not a made-up number. That's the implied non-deflationary price. Just look at global M1 with 40% gold backing. Look at the official gold in the world, about 35,000 tons. It's 8th grade math. It comes out to $10,000 an ounce to use gold to create confidence in the dollar.
Real quickly, and I want to bring Scott in, but basically what you're saying is the world is going to have to implode, basically, to get to that $10,000. That's a very dire situation that we're talking about for all of the financial markets, not just gold, if we get to the 10,000 mark in gold.
Well, it almost imploded twice in the last 18 years. I mean, 1998, again, hours away from complete collapse. 2008, maybe a few days away from the failure of every bank. So we have imploded twice in the last 16 years, so get ready for the third one. The difference, Sharon, is that 98, Wall Street bailed out a hedge fund. In 2008, central banks bailed out Wall Street. In 2018, who's going to bail out the central banks? It's going to be the IMF.
Scott?
Jim, I have a question. The investing landscape is littered with people who have said that gold is going to go to $5,000 or $10,000 an ounce. In fact, 3 years ago, we had Peter Schiff on our air when gold was at $1,700. He said that gold would be at $5,000 an ounce in 2 years. That was a year ago, and we're actually quite a bit lower from there. We have seen lots of people come on and say gold is going to outrageous prices. What is the mechanism that is going to lead people to flock to gold, even if what you say happens to the Federal Reserve? Why would people buy gold? You can't eat it. You can't drink it. It seems to me that if you're worried about what you're describing, you want canned food, bottled water, and ammunition.
Yeah, well, no, I think life goes on. I mean, we've been through worse crises. Look at the Great Depression. On March 1933, President Roosevelt closed every bank in America, just shut every bank and confiscated all the gold. So we've seen these things before. 1914, the New York Stock Exchange was closed for 5 months. 5 months, not 5 days. So these things happen.
It was closed because of a world war, not because of a financial problem.
Oh, you think world war is obsolete? You think that's not going to happen? Look at the South China Sea. Look at the Middle East. Look at Libya. Look at Iran.
I'm saying it doesn't do anything for gold. It doesn't do anything for or to gold. You can't say that the stock market was closed for 5 months because of a financial panic when it was really because of some crazy guy shooting an archduke.
Yeah, but it caused a financial panic. That's the point. Everyone in Europe held on to their gold.
No, it wasn't a financial panic.
Yes, it was. It was a financial panic. Yes, it was. Look at your history. There's books called When Washington Saved Wall Street. What happened was the Europeans sold stocks to get gold. The gold was being shipped by J.P. Morgan from New York. Bank of England actually opened a branch office in Ottawa, Canada, so they could send it by train because of submarine warfare. There was a total financial panic. I mean, look at your history. That's what happened. Now, it was caused by World War I. I'm not saying there's no connection. Of course there was a connection. But it wasn't
That's the reason they closed the stock market. You can't say they closed the stock market because of a financial panic.
No, they did. They did because everyone was selling U.S. stocks to get money to buy gold to ship it over to Europe. And so they said, well, we can't have the market collapse. So they closed the market. Everybody went out on New Street. You had a curb market. Again, this is well documented. I'm not making up the history. But by the way, you won't have to posit that. I mean, we can. There are many other things that could go wrong. It could be a natural disaster. The point is the system is unstable.
Why would people buy gold if those things happen?
They always have. It's money. See, don't think of gold as a commodity. I don't think of gold as a commodity. I don't think of gold as an investment. It's money. But it'll be a kind of money that people have confidence in. You say you can't eat gold. Well, take a dollar bill out of your wallet, Scott. Are you going to eat it? You're not going to eat the dollar. It's a medium of exchange. It's a store of value.
So Jim, to be clear right now, you're just buying and holding gold because you think it's going to go to this level. You're not really trading it.
No, I buy and hold gold to preserve wealth. I worked hard for my money, and I want to preserve it. I don't want to see it wiped out. I don't want to see a 30% decline in the stock market. I don't want to see inflation in the dollar. Gold will preserve my wealth.
Quickly,
that's why I have it.
I wanted to bring in Anthony Grisanti too to talk about how you trade it right now, though, Anthony. What do you think about what has been said, and how are you trading gold right now?
Well, Sharon, every time the Fed misses a deadline, we have a saying on the floor, add $30, $40 to the price of gold. And last week, when it looked like the Fed might act, gold actually sold off quite a bit. You saw the hedge funds kind of liquidate a lot of their positions. But now that it doesn't look like the Fed's going to act after that poor jobs number, they came right back into this market and started getting long again. So I'm going to trade this from the long side because I do agree with the point that I don't think the Fed's going to raise this year, and I think they're going to have a very difficult time to raise next year also. I think the economy is weak. It's starting to show that. And I'm a buyer. So at 1260, this trade looked a lot better this morning. At 1260, I'm looking to buy gold right now. I put my stop in all the way below 1242. There's good support at 1250. I'm not looking for a move to 10,000, but I'm looking for a move close to 1300, 1295 to be exact.
All righty. Well, Jim Rickards, thank you very much for your insights about the gold market as well. And we thank you for joining us on Futures Now. Scott, let me get to you real quick. You heard what Anthony had to say about how he's trading gold at the moment. What's your trade on gold?
I don't think much of Anthony's trade. And why? Because while we did really well with the trade buying it at 1210, I think all of the juice that we've gotten from the Fed for gold is out. 1275 is a critical level. We got above 1300 briefly last month. Well, that ended up being a key reversal. I think that this level is the top for gold.
All righty. So
Scott, I don't know about that. You got a dollar today that's rallying, and you got gold that's up over $10 an ounce. So there's definitely some buyers out there that don't agree with that position whatsoever. And, every time everybody's putting the death knell on gold, it has bounced this year. So it's probably one of the best performing commodities in the market. And as I said, this, to me, is based on the uncertainty the Fed's creating. So I'm still going to be a buyer as long as the uncertainty's out there.
That's my point. I think the rally's done. We've had the rally. I think it's done.
All right. So, Anthony, the risk reward here, quickly on gold?
Sharon, I'm risking 1,800 on this trade to make 3,500.